Clayton, business development companies are an important source of financing for small and mid-sized businesses in my state, having invested almost $300 million in Kentucky. I don't need an extensive response on this, but I do want to express my support for rationalizing how BDCs are treated under the acquired fund fees and expenses rule. I understand that the SEC staff is presently considering this issue, and I'm interested in a favorable resolution because BDCs have been so important to financing in Kentucky businesses. I do want to ask you a question about leverage lending because of the attention that it's received recently and alarm about rising corporate debt. Private credit fund managers, CLO managers, and other non-bank lenders often must register as investment advisors with the SEC. This results in substantial reporting requirements, regular SEC examinations, and activity limitations. Some members of this committee have voiced concerns about financial stability with respect to leverage lending and other non-bank lending activity. In my view, these concerns fail to take into account the role that the SEC plays in overseeing participants in this market. Chairman Clayton, as a regulator of private credit funds, can you discuss how your agency oversees their activities and how you are sharing this information with prudential regulators?
So I'm going to do this on a little bit broader basis, but what we should recognize is that our economy has grown since, let's just pick a date, 2010. It is a credit-based economy, but the amount of credit that's provided directly from the banking sector has gotten relatively smaller. That means the non-banking sector has to have gotten larger by kind of simple math. We recognize that. We are discussing that with our colleagues at the Fed, the FDIC, OCC, and others. But that is the reality. More of the credit that is underpinning our economy is outside of the banking sector and in the private sector, including in funds.
Given your oversight over investment advisors, though, do you see a systemic issue at this point?
If I saw a systemic issue, I would be doing something about it.
So the answer is no.
The answer is no.
Okay. Let me move on to Commissioner Peirce. Commissioner Peirce, as you know, the Business Roundtable recently published a revised statement of purpose, despite some BRT leaders' insistence that it's merely a restatement of existing practices. Some on this committee, as would have been predicted, have interpreted this as a shift away from the bedrock principle that directors and officers of a corporation owe an undivided fiduciary duty to maximize shareholder value. In other words, the primary job of a corporation is not to engage in social engineering. It's not to engage in politically correct causes. It's to maximize shareholder value. That's not to say that a company's social concerns, environmental considerations, or activities to ensure the well-being of employees, suppliers, or customers are irrelevant. It just means that shareholders may very well care about those issues and that the market may dictate that they help drive profitability. So, Commissioner Peirce, can companies effectively serve their customers, employees, suppliers, and communities without an undivided focus on maximizing shareholder value?
I think the singular focus on maximizing shareholder value is very important. It holds managers, it disciplines managers and forces them to focus. And obviously, as they're fulfilling that mandate, they're going to think about the communities they work in. They're going to think about their employees, and they'll think about suppliers as well. So the focus is really important.
So the ancillary goals, like those set forth in the BRT statement of purpose, aren't those ancillary goals, those secondary goals, aren't they predicated on a business delivering a profit and maximizing shareholder value?
Yeah, I mean, this is how companies have always run. They've wanted to serve their customers well so that they can serve their shareholders well.
Chairman Clayton, when asked about environmental, social, and governance metrics investing in an interview last week at the Delivering Alpha conference, you noted that lumping E, S, and G together is difficult because they are quite different. And Commissioner Peirce, you have described ESG as scarlet letters that stand for enabling shareholder graft. Shouldn't the central focus of SEC disclosures be to provide material information to the investing public? And Chairman Clayton, can you discuss what the Commission is doing to ensure that materiality remains the touchstone of our markets?
Well, I very much believe that materiality should be the touchstone of our markets. And as our markets change, what may be material does change, which is why we need to have a principles-based approach to disclosure.
Thank you. I yield back.
Thank you.